this is just a transaction where we have the seller and we have the buyer. In this case, the buyer just pays a deposit and takes the possession of the item, and then the balance will be paid in installment. So that's what we call the hire purchase, just a specialized transaction. And then when accounting for hire purchase, we'll come to see the method we'll be using for accounting for hire purchase. We have two methods. One method is the sales method, and the other one will be using the interest method. Those are the two methods. Now, for the interest method, I'll give you some different methods you can use on how to apportion the interest. So let's go to the whiteboard. So we are doing hire purchase. That's our today's topic. And we have said that a hire purchase is just a transaction which allows, or is a transaction which allows for the acquisition of an asset by paying a deposit and taking possession of the asset. Yeah, taking the possession of the asset immediately. Yeah, and then the balance will be payable in advance. I mean in installment. Now that's what we call the hire purchase. And how do we get how determine the hire purchase price? Now, when determining the hire purchase price, this is how we determine the hire purchase price. You just take the deposit, the amount you paid as a deposit, plus all installment. And you need to know that for this installment you are paying, they usually attract the interest. Another method you can use to get the hire purchase price, you can also take the cash price, then you add the interest. That's how you get that. The deposit plus all the installment, cash price plus the interest. That's how you get the hire purchase price. Now, when getting this interest, what other method can we use to allocate the interest? Method used to allocate interest. So one of the method is the straight line method. We have the straight line method. Then number two, we have the sum of digit method. Sum of the digit method. And then another method you can use is the actuarial method. Yeah, those are the major methods used to allocate the interest. Now, for the straight line method, this is where the total interest is allocated equally. So in this case, you allocate the interest equally over the hire purchase period. Then we have the sum of digit. Now, the sum of digit, this is where the interest is allocated on the basis of the sum of hire purchase period. This is what I mean. Now, assuming you are supposed to pay the interest, I mean the installment for the next 4 months. So if you're told it's 4 months, so this is how you use the sum of digit. You take 1 plus 2 plus 3 plus 4. Now that's what you call the sum of digit method. Then you get the total. So like that one, you get 10. So that's 5, 6. That one you get 10. Then, assuming you had gotten, you had calculated your interest and you are supposed to receive an interest of 3,000. And this person is supposed to pay in 4 installments. Now that means this 3,000 will be spread over the next 4 installments. So this I will get for the first installment, the second, the third, and the fourth. Now for the first installment, unaanzanga huko nyuma, you'll be taking 4/10 times 3,000. Unakuja ingine, the second installment, you take 3/10 times 3,000. The other one will be 2/10 times 3,000. And lastly will be 1/10 times 3,000. That's how you get that. Good. And then lastly, we have what we call the actuarial method. And actuarial method, this involves discounting the cash flow. You discount the cash flow. That discounting, that means by getting the present value of the cash flows. So, but in this case, we'll be mostly focusing on the first two, the straight line method and the sum of digit method. Tumesema under the straight line method, you allocate the interest equally. For example, assuming this 3,000 and you're supposed to receive for the next four installment, you just take 3,000 divided by 4. That's how you get. So that means every installment, the interest will be receiving 750, 750, 750 for the 4 installments. Good. So let's go to another part. We go to another part. So in that case, let's look at the method of accounting for hire purchase. Methods of accounting for hire purchase. So now we are looking at the method of accounting for hire purchase. Good. And kind of those who are sending their names, you send to this chat. Don't set to phone number, you set to that chat. There is somewhere you can be able to chat there. So one of the methods we can use is known as the interest method. We have the interest method. And the method number 2 is known as the sales method. Those are the 2 methods used when accounting for hire purchase. Now, for the interest method, what you need to note is that under this method, the interest or the sales, here the sales are recognized. The sales are recognized at cash price. But in this case, under sales method, the sales are recognized or is recognized at higher purchase price. That's the difference between the two. For the interest, the sales you recognize them at the cash price, and here you recognize them at the higher purchase price. Another difference is that under interest method, the interest is computed separately. Interest computed separately and recognized as an income. And recognized as an income. But in this case, under the sales method, the interest not computed separately. Interest not computed separately. Because in this case, the interest is already be included. You see, in this case, tumesema, we recognize the sales at higher purchase price. That means under higher purchase price, the interest already condone. Good. So those are the major differences between the interest method and the sales method. For the interest method, you recognize them at, you recognize the sales at the cash price, but in this case, you recognize the sales at the higher purchase price. And kind of for those who are copying, kind of you can stop copying. Just listen. I'll share the material. Everything I'm writing here will already be there. You'll already be having them. So those are the 2 methods used. And then we have some accounts prepared. What are the accounts do we prepare when accounting for hire purchase? So accounts prepared. One of the account prepared, or the major account, is the debtors account. Debtors account. And number two is the repossession account. Repossession account. And you know what's repossession? Now, repossession, this is where the person had acquired the goods, but is unable to pay the installment. So in this case, the seller goes and takes off the assets. That's what you call the repossession. Now, when preparing the debtors account, for the debtors account, you just bring the balance brought down. This one is an asset. You bring the balance brought down. Then you add the sales. Those are the sales made on credit. Unaweka hapo. Then, in case they pay, so you bring the cash received. Hiyo inapunguza hiyo. In case there was bad debt reduces the value of the debtor. And in case there was a repossession, so also the repossession, you remove it. Ukiendea hautamdai tena, then you can get the balance carried down. Now, what you get here as the balance carried down is what you'll take to the balance sheet. So another account we can prepare is the repossession account. And the motive of preparing the repossession account is to determine whether you have repossessed at a gain or at a loss. And this is how we prepare the repossession account. Repossession account. So in this case, you bring the debtors. At these debtors, you bring the outstanding balance. E debtors need the outstanding balance. Outstanding balance. This one, you see from the debtors account, on the credit side, we have the repossession. Now, this amount, the outstanding amount, utaleta hapa. And then you take it back to the stock. If you take that asset, you take it back to the stock at a valuation. You revalue that item. Then after you revalue, you can also provide for what we call provision for unrealized profit. And then from there, you can close the account. If the valuation and the unrealized profit of this side is more than this one, that means you repossess at a gain. We have a repossession gain. But this side is more than this one. That means you repossessed at a loss. That's loss on repossession. Good. So this one needs to be at your fingertips. How to prepare the debtors account and how to prepare the repossession account. You can note somewhere. You can note this account, repossession account. Yeah, this one, in case you have a pen somewhere, you can note that one, repossession account. What do you debit? What do you credit? Only the two. Good. Then we have this thing I have introduced here, the unrealized profit. Now, how do we determine the unrealized profit? So let me give you a formula on how to determine the unrealized profit. Yeah, we are talking about the unrealized profit, the URP. Now, for the unrealized profit, we'll be computing both. For unrealized profit, we compute for both. One, for debtors, and number two, for repossession. For repossession. Now we'll be computing the two unrealized profit on debtors and on repossession. And then how do we determine the unrealized profit? Now this is the formula of getting the unrealized profit. For unrealized profit, you take the outstanding balance or the outstanding amount, then you divide by the higher purchase sales, and then you multiply by the gross profit. That's how you get that. Outstanding amount, you divide by the higher purchase sales, then you multiply by the gross profit. Now with that, you are ready now to do a question. So let's start using the method of interest method. So we start on a question on interest method. I want us to do an illustration there. Let's do that question. So we are told that Kopesha Limited has been in business for several years, dealing in electronic goods. All goods are sold on hire purchase terms. The foreign trial balance was extracted from the books of the firm, not the firm, as at that 1st March 2016. So you have the ordinary share capital, cash at bank in hand, the account payable, operating expenses. We have the PPE, depreciation, hire purchase installment receivable, hire purchase sales. Then we have the purchases and we have the inventory. Additional information number 1. Inventory as at that 1st March 2016 was valued at 2.4 million. That's the closing stock. Number 2, PPE should be depreciated at 5 million for the year ended that 1st December 2016. That's another expense. Number 3, each unit was sold on hire purchase basis on the following terms. We have the cash price, we have the deposit, and we have the interest, and that's the total. So how much will be the hire purchase price? So kind of you can post your answer there. To number 3, we have the cash price, we have the deposit, and we have the interest. How much will be the hire purchase price? Kindly let's participate. Hiyo ni kufanya tu na kichwa, and then you just type. Yeah, it should be 4,600. Remember we said that hire purchase price, we say that hire purchase price, you just take the cash price plus the interest. Na tumepewa hapa. You see in this case, the cash price is 40 and the interest is 6. So it's 40 plus 6, you get 46. Yeah, ignore about this deposit. Number 4, you're told that assume that all the sales are made at the end of each quarter, and the quarter ends on that 1st March, June, September, and December respectively. So you have 4 quarters of the year. The balance due in each hire purchase sales is payable in 4 equally installments of 9,000 per quarter, payable at the end of each quarter and commencing in the quarter following that which the sales was made. Hiyo ni Kiingereza. So you can go through it, number 4 again. Mpaka hapo, go through it again and try to interpret what the examiner is saying there. Yeah, I hope you are there. We are told that the balance due in each hire purchase sales is payable in 4 equally installments of 9,000 per quarter, payable at the end of each quarter and commencing the quarter following that which the sales were made. Inamaanisha hivi. Remember we have 4 quarters, Quarter 1, quarter 2, quarter 3, quarter 4. We are told that the sale in quarter 1 will be paid at the end of the quarter following that of sale. That means the sales in quarter 1, the receivable will be received, or the amount will be received in quarter 2. The sales ya quarter 2 itaanza kupokewa quarter 3. The sales for quarter 3, the first installment will be received from quarter 4. That's what it means. And you see we are paying in 4 equally installments. This is what it means. For example, ya quarter 1, we receive for the next 4 quarters. Kwa hivyo itakuwa first quarter, second quarter, third quarter. The 4th installment will be received first quarter of the following financial year. Hivyo ndivyo hiyo Kiingereza inamaanisha. Good. We go back there. Then you are told that the number of units sold during each quarter was follows. So you have the quarters too and the number of units. So that means during the year, you add the number of units here, eh? Those 3, 6. So that means during the year we sold 1,200 units. All installments were received on due dates. Number 5. The sum of digit method is to be used to apportion interest. And I showed you how to use the sum of digit. The appropriate amount being credited to the quarter in which the installment is received. Then number 6, interest in the included in the operating expense is a lease rental payment of 2 million paid at the commencement of the financial year. Now that's what we call lease rental paid in advance. When we are doing the published financial statement, we did an illustration where we are paid in advance and when we paid in arrears. So we need to know how to account for it. At the commencement of the financial year, this relates to equipment whose fair value is 8 million. The payment has been treated as an operating risk where it's a finance risk. So you need to account for it. The duration for the lease is 5 years and the interest is 10% per annum. Lease rental are paid in advance. So remember vizuri, the duration for the lease is 5 years. And then the lease rental are paid in advance. So required the income statement and the statement of financial position. Now, how do we account for that? So let's do that. So I want to start with the last one. Hiyo ya mambo ya lease. Whenever you see about the lease, you need to come up with amortization schedule. Amortization schedule. Naanza nayo ya leases. And then for amortization schedule, we prepare for how many years? For those who were in my published class, we say that for lease, for financial purposes, you see the lease was for 5 years. But when preparing the amortization schedule, you only prepare for 2 years. So you have the period here, 1 and 2. When preparing the amortization schedule, to prepare the financial statement, only prepare for 2 years. The period, you start with the balance brought down. Remember this one, we are paying in advance. Now, how you account for those payable in advance and those in arrears is totally different. So it's balance brought down, then tunalipa in advance. Kwa hivyo tuanze na payment. After you pay, now you can determine the balance due. Now this balance due, you utalipia interest. Then you determine the principal, and now you can get the balance carried down. So to number 6. Number 6, included in the operating expenses is a lease rental payment of 2 million. That means our payment is 2 million paid at the commencement of the financial year. This relates to an equipment whose fair value is 8 million. That means our balance brought down will be 8 million. The payment has been treated as an operating risk where it's a finance risk. The duration for the lease is 5 years. We account for 5 years. I'll show you how to apply the 5 years. That 5 years is to help you to get the depreciation. And the interest is 10% per annum. Kwa hivyo interest ni 10. So tukikuja hapa, the balance brought down, the fair value is 8 million. And the payment, we had paid 2,000. That means the balance due, itabakia 6,000. Now, the interest you'll pay based on the balance due. Na tumeambiwa the interest is 10%. So 10% of 6,000, you'll get 600. Tukuja kwa principal. How do you get the principal? Now, this is how you get the principal. This is how you get the principal. Remember, you had paid them 2,000. Kwa hii payment, the payment include the principal and the interest. That's what it includes in the payment. So this payment of 2,000, interest ya 600 iko ndani. That means the principal is 1,400. That's 2,000 to interest. That means the principal was 1,400. Now we can get the balance carried down. This is how we get the balance carried down. You take the balance at the beginning, the balance brought down, you minus the principal. That's how you get the balance carried down. So it will be 8,000 minus 14, and you'll get 66. Then the balance carried down becomes the opening balance the following year. So itakuwa 66. Payment does not change, is 2000. Ukalipa 2000. Kwa hivyo itabakia ngapi? Itabakia 46. Then the interest is 10% of 46, you'll get 460. Principal tumesema, you take the payment, you pay them 2000, you deduct the interest of 460. Na utapata principal was 1540. Now to get the balance carried down, you take the balance brought down, you minus the principal. Na itabakia 5060. Now, preparing that one is not a problem. Now, the problem is that what do we take to the income statement? What do we take to the balance sheet? To the income statement, we say that you focus on the first year. To the balance sheet, you focus on the second year. That's what we said. Eh? And then, for income statement, unapeleka two items. Eh? Number one is the interest. Number two is the depreciation. Under the balance sheet, we have what we'll take to the non-current liability, and we have what we'll take to the current liability. So interest, tumesema, to the income statement, we are looking for the year, and this is the year you're operating. Eh? You look at the interest. Unachukua interest for the first year, which is 600. That's what you take to the income statement. Depreciation ni rahisi sana. You see the fair value was 8,000, and the lease duration was for 5 years. You divide by 5. So you can get that the interest, the depreciation per annum, itakuwa 16. Twende kwa balance sheet. Tumesema to the balance sheet, you focus on the second year, this one. Now, when you are paying in advance, what do you take to the non-current liability? You take the balance due. What do you take to the current liability? The payments. That means to the non-current liability, unakuja for the second year, you take the balance due, and here the balance due is 4,600. Then, for current liability, you take the payment, and the payment was 2,000. If I may take you back, assuming it was payment in arrears. Remember tulisema in arrears, In arrears, utakuwa unafanya hivi. In arrears hapa kwa non-current liability unachukuanga the balance carried down for the second year, and to the current liability unachukuanga the principal. That's when you are paying in arrears. But when you are paying in advance, you take the balance due and the payment. You have to differentiate between the two. When you're paying in advance, when you're paying in arrears. Good. So I'm through with number 6. Number 6. What else should I adjust? Twende number 2, number 3. Let's go to note number 3. Each unit was sold on a higher purchase basis on the following terms. Tumeona cash. Now, in this case, we just need to focus on the interest, because we say under this method, the interest will be computed separately. The interest here is 6,000. Then to kuja number 4. Number 4, we had already read the statement that assume that all sales are made at the end of each quarter, and the quarter ends on that 1st March, June, September, and December, respectively. The balance due on each higher purchase sales is payable in 4 equal installments of 9,000 per quarter, payable at the end of each quarter and commencing the quarter following that which the sales were made. Then you're given the number of units sold during each quarter. So umepewa easy. So now we need to compute the interest. So to get the interest you get for first quarter, hapa to lose 100, 200, 300 na 600. So now let's account for the interest. And we're using the sum of digits. So number 3, we are looking at the interest. So kuna hiyo quarter 1, quarter 2, quarter 3, and quarter 4. Quarter 1, we sold 100 units. Hapa tukauza 200, 300, and 600. And then tumeona the interest per unit. Yeah, the interest per unit is 6K. So you multiply by 6. We want to determine the interest income there. First quarter, to use 100, na each unit inatupea an interest of 6K. So that means we had 600. This one is 1,200, 1,800, and 3,600. Then after you have that, we need to apportion it. How do we apportion? Before we apportion, tumeambiwa that that's note number what? Note number 5. Let's go to note number 5. Note number 5, you are told that the sum of digit method is to be used to apportion the interest, the sum of digit. How do we use the sum of digit? Tulisema sum of digit. In this case, we have 4 quarters. Now, using the sum of digit, itakuwa hivi. It's 1 plus 2 plus 3 plus 4. That's what we call the sum of digit. Quarter 1, quarter 2, quarter 3, quarter 4. Then you get the total. And the total you'll get is 10. Now, let's get the interest there. So, to apportion your quarter 1. Like hapa tumeona quarter 1, we made an interest of 6. I'm hoping we are there. But every cell will receive that in the next 4 quarters. What does it mean? 1, 2, 3, 4. This 600, tunatumia sum of digit, it will be received in 4 installments. Installment 1, installment 2, installment 3, installment 4. So hii 600 to make on the first quarter. Remember the installment was to be received for the next 4 quarters. And you're using the sum of digit. So hii ya kwanza, uta multiply by 4 over 10. It's 4 over 10. 3 over 10, 2 over 10, 1 over 10. So that's 40% of 600. That one is 240. This one is 180. This one is 120. This is 60. This means that ukireceive the first installment, ile interest itakuwa ndani ni 240. If you receive the second installment, the interest in that income will be 180. If you receive the third installment, the interest in that will be 120. And on the last installment, the interest will be 60. Tuende quarter 2. You see quarter 2, our total interest was 1200. So it will be 1200. Then you multiply by 4 over 10, 3 over 10, 2 over 10, 1 over 10. This one will get 480, 360, 240, 120. We go to quarter 3. For quarter 3, the total installment interest was 1800. So you take 18. And then 4 over 10, 3 over 10, 2 over 10, 1 over 10. So this one you'll get 720, 540, 360, and 180. And also we had quarter 4. Quarter 4, the interest made here was 3600. So you just take 3600. You multiply by in 4 over 10, 3 over 10, 2 over 10, 1 over 10. So this one utapata it's 1440. This one is 1080, 720, and 360. So that's how you apportion. Now, what do we take to the income statement? This is very important. So, tuangalia kama hii ya first quarter. Quarter 1, quarter 2, quarter 3, quarter 4, quarter 1, quarter 2, quarter 3, quarter 4. So this means, remember tuliambiwa, if we made a sale on the first quarter, the payment itaanza kupokelewa the quarter following that of sale. So inamaanisha, the sale we made in the first quarter here, the first installment which will be received from quarter 2, interest yake itakuwa 240. Kwa hivyo ingine itakuwa 180. Ingine itakuwa 120. Hii, the fourth, itapokelewa the following year. Tuachane na hiyo. Tukuje quarter 2. The sale of quarter 2, hapa quarter 2, the first installment will be received from the third quarter, that month following that of sale. And the first quarter, interest yake tuliona it's 480. Imefuatwa na 360. Hii 240 and 120 itaenda to the other year. Tukuje that quarter or quarter 3. The sales made in quarter 3, the first installment will be received from quarter 4. Na hapa quarter 3, the first installment we are supposed to receive, it's 720. Hizo zingine zote zitakuja the following year. Tukuje quarter 4. any sale we made in Q4, the first installment will be received from the following year. Hiyo hatutaki. So that means you add the total. This is what the interest received during that year. You take 240 plus 180 plus 120 plus 480 plus 360 plus 720 and you get 2100. Now this one utapeleka kwa other incomes. You take it to other incomes. Yeah, hiyo tulikuwa tunadjust number 3, eh? And with that now we can present our financial statement. Let's present our financial statement. So number A, you are supposed to present the income statement. And this is Kopesha Limited. We are preparing the income statement for the year ended that 1st March 2016. So let's put our shillings in thousand. So tuanze na sales, eh? So as I take a cup of water. So kindly niambia sales ni ngapi hapo? Umepewa sales hapo. Just post your sales there. Just post your sales. Ushapewa hapo. Yeah, I'm back. Ni Jen tu amejibu na Faith. I'm looking for sales, eh? Yeah, we already have the higher purchase sales, which is 55,200. That means our sales will be 48,000. Hey. Haya. Naona kuna yenye nimesahau kenye nilikuwa nasema. When I was saying the differences between the interest method and the sales method, one thing I said that the sales under the interest method are recognized at cash price. Tuangalie hapa. Here the higher purchase sales ni 55. That's higher purchase sales. Eh? Tumesema under the interest method, like the one we are doing is the interest method. We say that the sales when using the interest method should be recognized at cash price. Tuangalie, the cash price was 40,000 hapa, note number 3. Are we there? And then tumeona note number 4. The units sold during the year, the total is 1,200. So kwa hivyo ukitaka kujua sales, eh? You just take the 1,200 units, you multiply by the cash price, and the cash price was 40,000. That's how you get the sales. So hiyo ni point nilisema, eh? Now let's go to the cost of sales. How do we get the cost of sales? It's just the opening stock. You add the purchases. You raise the closing stock. Opening stock from the trial balance you are given there. Yeah, you have the inventory here. 1st April was 1,800. So this is 1,800. You add the purchases. You already have the purchases here. 24,600. 24,600. You raise the closing stock. That's additional information number 1. Number 1, you are told that inventory as at that 1st March 2016 was valued at 2.4 million. So the closing stock is 2.4. You get the cost of sales, which will be 24,000. That means our gross profit, 48 minus 24, you get 24. Then the interest, you recognize it as an income. Hivyo ndivyo tulisema. The interest should be computed separately. Kwa hivyo haitaonyeshwa hapa kwa sales, and then recognized as an income. So you bring interest income. And the interest income ndio hii tumefanya hapo. Yeah, for that year it was 2100. So uongeze 2100. Then we go to the expenses. Under the expenses tulikuwa tumepewa operating expenses. Also we had the depreciation, and for depreciation we have both for PPE and for the leased equipment, and also we have the interest expense. Now tuende kwa operating expenses. Yeah, here we have the operating expenses. Operating expenses is 16,000. So you take 16,000 minus 2,000. Remember, note number 6, kulikuwa na ile lease. We had paid a lease rental. Let me take you back there. Total number 6. Included in the operating expense is a lease rental payment of 2 million paid in the commencement of the financial year. Tulikuwa tumeambiwa the payment has been treated as an operating lease, whereas it's a finance lease. Kwa hivyo ukuja hapa kwa operating expense, it's 16 utoe hiyo 2,000, tabakia 14,000. Depreciation ya PPE, note number 1, note number 2, note number 2. PPE should be depreciated at 5 million for the year ended that 1st December, that 1st March 2016. So you have a depreciation of 5. Then tuende kwa lease. Kulikuwa na depreciation ya lease, Tukuje hapa kwa lease. There was a depreciation 8,000 divided by 5 na tukapata 1,600. And then we have the interest expense. The interest expense is 600 here. Jen, kama tuko pamoja? And then you can get the profit. Now the profit you'll get, it will be 49. Good. Now let's go to balance sheet. Kopesha Limited. Statement of financial position. As at that 1st March 2016. So our shillings are in thousand. So under the assets, we start with the non-current assets. Kwa non-current assets, kulikuwa na PPE. And then there was leased equipment. You capitalize it. Now for that, tuenda kwa PPE, here from the trial balance. We had PPE, 1st April 2015 was 55,000. Then there was depreciation as at 1st April 2015 was 20,000. And note number 2, PPE should be depreciated at 5 million. So itakuwa, PPE was 55,000, had accumulated depreciation of 20,000, and number 2, we have depreciation for the year of 5. So itabakia 30,000. Leased equipment, the value was 8 million. Then, ni hii, the balance brought down, and then it depreciated by 1,600. You minus the 1,600. By that, you'll get 64. Then we go to the current assets. Now for the current assets, we have inventory. Note number 1, ulikuwa umepewa the closing stock. Number 1, inventory as at that 1st March 2016 was valued as 24. So hiyo ndio unaweka 24. Then you also had cash at bank. Now for the cash at bank, already given there, the cash at bank had in hand was 1,800. 1,800. And then you also have interest receivable. Usisahau na hiyo. We have this interest to make up as part of other income. The interest we expect to receive within the year, this 21, it becomes part of current assets. We expect to receive that interest within a year. So it was 21. Then kuna debtors or the account receivables. Now for the account receivables, there, tuko hapa. hire purchase installment receivable, it's 34,200. So it will be 34,200 minus 7,200 na itabakia 27,000. Hii 7,200 imetoka mahali hapa. Tuangalie hapa. You see, tuko hapa. From the trial balance, you see the sales, the hire purchase sales ni 55,200. It's 55,200. Hiyo ndio walikuwa wameonyesha in their financial statement. But we have seen that under interest method, we should recognize the sales at cash price. And the sales here recognized it's 48. Utoe 48. That means the receivables we have of 34,200, already it was overcharged. Kwa hivyo ilikuwa overcharged na ngapi? It's 55,200 minus 48, and you'll get 72. Tulikuwa tume overcharge our debtors by 72 because the interest was included. So in that case, that's why I'm taking 34,200, I deduct the overcharged or the overcharged debtors or receivables. So I'd get 2,700. So that one will get 69,700. Then we go to equity and liabilities. Now for the equity and liability, we have ordinary share capital, and then you add the profit. And for the ordinary share capital already given there as the first item here, ordinary share capital was 53,200. So it's 53,200. And then you add the profit. The profit, we didn't have any retained profit. So you just add this profit for the year, which was 4,900. Then we go to non-current liability. Kuna lease obligation. Then we go to the current liability. Still we have lease obligation. And then tuko na account payable. So turudi kwa lease. Under lease, we did as the first working. Tulisema you have what will take to non-current liability. This 4,600. Hiyo ndio unaleta hapa 4,600. Also we had what to take to the current liability, the payments of 2,000. Hiyo unaileta hapa. Then we have the account payable. Hiyo unaipata kwa trial balance. Here we have here account payable 5,000. Yeah, and this one you get 69,700. Good. Now for this for interest method, you need to do a lot of practice. Na practice inakujia hapa hapo. Yeah, there, and also determining when to recognize at cash price, when to recognize at higher purchase price. Good. So you don't have to copy, you don't have the notes. Kwa hivyo si lazima ukope hiyo. So now let's go to the second method, the interest method. That was the interest method. Now we go to the sales method. That we say under the sales method, the sales will be recognized at sales, at higher purchase sales. And then mostly when we are doing the sales method, kuna kuanga na cases of repossession. So we are doing method number 2 for the sales method. What you need to note is that under sales method, we said that the sales are recognized at higher purchase price. Therefore, interest will not be computed separately. Interest iko ndani already. So let's do an illustration. So Lipa Power Limited commenced business on 1st January 2016 as a supplier of refrigerators. All sales are made on higher purchase terms, with the company taking credit of the gross profit, including interest in the proportion to the installment collected. Throughout the year ended that 1st December 2016 and 2017, the total price, including the interest, charged to every customer was 50% above the cost of goods sold. Mpaka hapo inamaanisha aje? The cost is 100, eh? And then we are selling, putting a profit of 50%. That means it will be 150%. So, turudie tena, throughout the year ended that 1st December 2016 and 2017, the total price including interest charged to every customer was 50% above the cost of goods sold. Or, in the case of repossessed goods, 50% above the value which the goods were taken back into the stock. So, ukipeleka goods at stock, uweke at a valuation of 5,000. So, ukiuza, you will sell at 5,000 times 150. Still, you also add 50 on top as a profit. Hire purchase contract requires no deposit and provide for the payment of 12 equal monthly installments. The foreign trial balance was extracted from the book of Repapore Limited as at that 1st December 2017. So you have the share capital and current asset at cost, provision for depreciation, hire purchase installment less due provision, installment due less provision for unrealized profit. Only debtors, those are the account receivable. Yeah, hire purchase installment due less provision for unrealized profit. Hiyo tumesema ni debtors. Then we have the stock as at 1st January 2017. That's opening stock. Purchases, cash received from the customer. We have the bank balance, creditors, general expenses, and the revenue reserve. Now, revenue reserve is the same as retained earnings. Number 1, the sales, including interest for the year ended that 1st December 2017, were 94,650 is on sales. Number 2, in October 2017, the company repossessed installment on these goods amounted to 2.4. Sorry, in October 2017, the company repossessed some goods which had cost 4.8 and had been sold earlier in the year. The unpaid installment on this good amounted to 2.4 million, in respect of which nothing was recovered apart from the goods, which were taken back into the stock at a valuation of 2 million. The repossessed goods were resold before the end of the financial year. The total selling price, both on the original sales and on resale of repossessed goods, were included in the sales for the year ended that 1st December 2017. Number 3, all installments were paid on time except for those referred in note 2 above. Number 4, all goods unsold as at that 1st December 2017 were in good condition and were to be valued at cost. Number 5, provision for depreciation on non-current assets was to be provided at the rate of 10% per annum. Required. Income statement for the year ended that 1st December 2017 and the statement of financial position. So we have to prepare the two. Now, when preparing the two, so tuanze na workings. So tulisema, in this case, mahali kuna repossession, mostly when we are doing the sales method, we have two major accounts we have to prepare. One is the debtors account, and the other one is the repossession account. Tuanze na debtors, so we start with the balance brought down. Hiyo nimemwambia ni gani Ni hii. The hire purchase installment due less provision for unrealized profit as at 1st January 2017 was 28,350. So it's 28,350. Then number 1 kulikuwa na sales. Note number 1. Number 1, we are told that the sales including interest for the year ended that 1st December 2017 were 94,650. So hiyo una debit still, which is 94,650. Then kwa hizi tuliuza, nimeona kuna pesa tulipokea, the cash received. For the cash received, here we have cash received from the customer, 80,625. So it's 80,625. Now, let's go to note number 2, when you had the case of repossession. On 1st October 2017, the company repossessed some good which had cost 4.8 and had been sold earlier in the year. The unpaid installment on this good amounted to 2.4. Kwa hivyo hapa kwa debtors unatoa hiyo the unpaid amount Kwa hivyo repossession, huyo jamaa alikuwa amekataa kulipa 24. So when you come to the repossession account, tulisema unaletanga the outstanding amount of the debtors, and you have repossessed debtors worth amount 24. Hiyo utanaleta hapo. Tukuje hapa. The unpaid installment on these goods amounted to 2.4 million, in respect of which nothing was recovered apart from the good, which were taken back into the stock at a valuation of 2 million. Turudi hapa kwa account. Tulisema you take the debtors, then you take them back to the stock at a valuation, and they were taken back at a valuation of 2 million. Then kuna kitu kingine tulisema tunaweka hapa, the unrealized profit. How do we get the unrealized profit? We say that for unrealized profit, we compute for both debtors and repossession. And this is how we get the unrealized profit. So kwanza tufunge hii ya debtors. Let's get the balance carried down there. As I read the formula. So give me the balance carried down there. As I get the unrealized profit. We say unrealized profit, we compute for debtors and repossession, and this is how we get the unrealized profit. Gibson, tafuta hii balance carried down. Unrealized profit, we say you take the outstanding amount or the outstanding balance, you divide by the higher purchase sales, you multiply by the gross profit. That's how you get that. So tutafute ya debtors unrealized profit for debtors, and also tutatafuta unrealized profit on repossession. Yeah, it should be that 9. Yeah, the balance carried down. Yeah, it's that 975. Now let's compute the unrealized profit. We said you take the outstanding amount, divide by the higher purchase sales times gross profit. So itakuwa hivi, tuangalie hapa, and then we say that for unrealized profit we compute for both debtors and repossession. So hapa itakuwa the outstanding amount, tuanza na debtor, ndio hii tumepata here as the balance carried down, which is that 975. You divide by the higher purchase sales. Hii tulikuwa tumepewa note number 1. The higher purchase sales including the interest ilikuwa 94,650. Then you multiply by the gross profit. So hapa kwa gross profit ndio kuna maneno. Tuangalie hapa. That is number 1. The sales including the interest for the year ended that 1st December 2017 was that. But there is something ulikuwa umeambiwa hapa. The second paragraph, that throughout the year ended that 1st December 2016 and 2017, the total price including interest charged to the every customer was 50% above the cost of goods sold. So ukitaka kupata gross profit, this is what you do. You see the sales for the year was 94. Yeah, 94,650. That was the sales, which is equivalent to 150%. Now, can we be able to get the original cost? So the cost, it's 100%. Kwa hivyo 100% itakuwa ngapi? So 94,650 is the same as 150%. What about 100%? You get the original cost. How much do you get as the original cost? If you have your calculator with you, kindly you can assist me there. Fozia hapana. Yes, it should be 63,100. 63,100. Good. Now, can we be able to get the gross profit? So gross profit, this is how we get the gross profit. Ni kuchukua hii sales 94,650. Utoe hii, this was the cost 100%. Utoe 63,100. na utapata, is it that 1,550? Yeah, to get the gross profit here, you take the sales, utoe that cost of 63,100. That means the gross profit was that 1,550. And by that, the nearest profit will be 13,325. Tukuja hapa, unrealized profit for repossession. The formula does not change. You take the outstanding amount, and here on the repossession, huu data hakuwa amelipa 24. So you take 24 over higher purchase sales. Higher purchase sales. Let's go to note number 2. Note number 2. Number 2 umeambiwa. I mean, is it number 2? Yes. It's number 2. In October 2017, the company repossessed some good which had cost 4.8 and had been sold earlier in the year. Kwa hivyo higher purchase sales ni ngapi? Higher purchase sales on that repossessed good. Kwa hiyo ya repossession, Any idea? Yeah, tuangalie hapa. Tumeambiwa repossessed some goods which had cost 4,800. Hii ndio ilikuwa cost, Yeah, let me take you back there. Goods which had cost 4,800. Now, hiyo ni cost. Na tuliambiwa the sales we are made at 50% above. If you want to get the higher purchase sales, it's 4.8 times 150%. Ukitaka kujua the higher purchase sales, because 48 was the cost, and that one you get 7,200. So the higher purchase sales will be 72 times the gross profit. How do you get the gross profit? Gross profit iko hivi, sini 72, which the higher purchase sales, and the cost ilikuwa imecost 48. That means the gross profit is 2,400. So you multiply by 2,400. And with that, you get an realized profit of 800. So nataka tufunge hapa, So an repossession account, tulisema ni valuation, and then you bring unrealized profit. Now, unrealized profit on repossession tumepata ni 800. Now we cross. This side is more 28. That means we repossessed at a gain. The gain on repossession of 400. Now, for the unrealized profit, what do you take to the income statement? Utachukua hii, 13,325 plus hii ya 800. Now, that's what you take to the income statement. And that one will be 14,125. Good. Just hoping we are good up to that point. So before now we prepare the financial statements. So now let's present the financial statement. We start with the income statement. Start with the income statement. So the name of the company was Ripapore Limited. Income statement for the year ended that 1st December 2017. Our shillings are in thousands. Now, sales, you can write the one you are given, or an examiner can tell you to separate between the original sales and the repossessed. So let me separate the two. The original sales and those on repossession. Like that. If ndivyo nasema. You see note number 1, ulikuwa umeambiwa, if I take you back to note number 1. You see note number 1, you are given the sales including interest for the year ended that 1st December 2017 were 94,650. Those were the sales. So in that, tukuje hapa, step number, note number 2, huku chini. You are told that we have this, The unpaid installment on this good amounted to 2.4, in respect of which nothing was recovered apart from the goods. which were taken back into the stock at a valuation of 2 million. Now, kama you took them back at a valuation of 2. Na uambiwe uuze. Kumbuka tulikuwa tumeambiwa ukiuza unauza with a markup at 150 times 150. That means if we restore them again, the sales itakuwa 3,000. Which were taken back into the stock at a valuation of 2,000. The repossessed good were sold before the end of financial year. Repossess, tukaivalue at 2,000 and then tukauza later. So that means your tuliuza is 2,000 times 150. That means the repossessed sales ni 3,000. Kwa hivyo, I'm saying here, kwa original sales, note number 1 was 94,650. Utoe hizo on repossessed because they are already included here. Na tumeona it's 3,000. Yeah, I have done, the repossessed was 2,000 times 150. That means we sold them at 3,000. So it's 94,650 minus 3,000, you get 91,650. And then on repossessed, weka hiyo sales yake hapo. Na tumeona hiyo sales ni 2,000 times 150%, which is 3,000. That means the total sales, ndio utapata 94,650. That was the total sales. Now let's go to the cost of sales. Now also for the cost of sale, you have to separate between the two. The cost of sales on the original sales and also on repossession. Tukuja hapa kwa original sales. Ni rahisi tu kuargue. This is how you argue. If the original sales, tumeona hapa ni 91,650 hii. And this one is equivalent to 150%. What about 100%? You get the cost. Na ni the same na hii ulikuwa umepata hapa. You see here the X, 94,650 was 150. What about 100? Tukapata 63,100. It is 63,100, but hii ilikuwa include the repossessed good of 2,000. But you can just do with this, that the original sales is 91,650, the same as 150. What about 100? Itakuwa ngapi? And you'll get 61,100. On repossession, the cost tumeona ni 2,000. Hii, the value at which you took that item back to the stock. Then you add, so itakuwa 63,100. Na ndio hii sasa in full. Yeah, this 63,100 when the sale was 94,650. Good. Now you can get our gross profit. So it's 94,650 minus 63,100, and you'll get 31,550. Adio hii. The gross profit here you have already gotten was 31,550. It should be the same. Now after you get the gross profit, remember we had repossession gain. And repossession gain tumeona ni 400. Ndio hii hapa, the 400. Then we go to the expenses. Under expenses, we have the unrealized profit. Here is the unrealized profit. I have read the two. One that 13,325 for the debtors. Then I have added on repossession of 800. I do get 14,125. 14,125. Then also we have general expenses. Now also nimeona kuna depreciation ya 10%. Now for the general expenses, yeah, we have the general expenses here, 16,150. Then 10% depreciation. That's note number what? Note number 5. Provision for depreciation on non-current assets were to be provided at the rate of 10% per annum on cost. So you just take 10%, ukuje hapa. We had non-current asset, ilikuwa 10,000. So it's 10% of 10,000, hiyo ni 1,000. You multiply by 10,000, and that one you get 1,000. So you'll get your profit of 675. That's the income statement. Now let's go to the balance sheet. So it's ripapore. Statement of financial position as at that 1st December 2017. So our shillings, let's put them in thousand. We start with the assets. So we have the non-current asset there. Now, silikuwa 10,000, accumulated was 1,000, depreciation for the year is 1,000. This is what I'm doing. The non-current asset at cost is 10,000. Then there was provision for depreciation as at 1st January 2017 was 1,000. Then note number 5, tulikuwa tumeambiwa provision should be provided at 10%. So you take 10,000 minus accumulated of 10, half 1,000, minus depreciation for the year. And the depreciation for the year, ndio hii, tumepata it's 1,000. So, and you'll have 8,000. Then we have the current assets. For the current assets, we have the bank balance. I've seen the bank balance there. Also, we have the debtors. And then we have the closing inventory. For the bank balance, yeah, here you have the bank balance. And you need to be very keen, whether it's on the debit or on the credit. Ikiwa credit, unajua that's bank overdraft. You take it as part of liability. So, tukuja hapa kwa bank. So, bank balance, it's 6,500. Bank ni 65. Debtors, for debtors unakujanga from the debtors account. From the debtors account, you had the balance carried down of 39,975. You take 39,975, you minus, there was unrealized profit on debtors. Hii tulitafuta hapa. You deduct that, 13,325. 13,325. You take the balance carried down, you raise the unrealized profit on debtors. Then by that, you'll get 26,650. Inventory. This one we are not given. We are not given inventory, but you can be able to get that. So let me take you back. How do we get cost of sales? Cost of sales is opening stock plus purchases minus closing stock. That's how we get the cost of sales. In this case, we have the cost of sale, we have the opening stock, we have the purchases. So what we need is the cost of sales. So upeleke the other side too. So to get the cost of sale, it will be opening stock plus purchases, ileta the other side minus cost of sales. How much was the opening stock? Here's the opening stock. Stock as at 1st January 2017 was 6,600. Chukua 6,600. You add the purchases. We had the purchases of 59,000. You add 59,000 minus cost of sales. Now for the cost of sales, tukuje hapa, you only take for the original sales. Hey, the cost of sale uchukue hii ya original sales peke yake, 61,100. Because repossessed, it has been accounted twice. So only take the 61,100. 61,100. Utapata ngapi? You can compute that one for me. And you give me the closing stock. Yeah, it's 4,500. Thank you. So that means our closing stock will be 4,500. And the total will be 45,650. Now let's go to the equity and liabilities. For the equity and liability, we have the ordinary share capital. And also we had the revenue reserve. Tumesema revenue reserve the same as retained earning. Revenue reserve. Now for the ordinary share capital, yeah, we have the share capital here, and the share capital was that 5,000. Then we have the revenue reserves. The revenue reserve and retained earnings. So it was 51.15. So it's 51.15. You add the profit for the year. And the profit for the year, tumepata ni 675. That was the profit for the year. 675. So you add 675 and you'll get 57.90. Then for liability, we only had creditors. So under current liabilities, so we have the creditors. Now creditors, it's 48.60. Yeah, 48.60. You'll get 45.650. We do another one or we do an assignment? I'll give you an assignment. So give me your comment there. Another one, assignment. Umesema assignment, najua umechoka, yeah. Now assignment, I want you to go and try November 2017. So we are finishing. Now for this November 2017, it's similar to the one we have done lastly, this question. Then, or see lazima ufanye as an assignment. The handout I'll send, I have already done it. So what you'll do, you kindly try to read that question and then you follow what I have done. It's already done. Nimeifanya for that handout. You try to follow it. In case you have a question, kindly feel free to ask me. That's my contact. And then after that question, nimeandika some other assignments, so you can try those assignments. And then after do that assignment, you can WhatsApp me via that number. Good. So let me give you some 3 minutes to ask live questions. Usitype swali hapo. You just raise your hand, we shall unmute you. One minute. So, kindly raise your hand. Nimesema sitasoma yenye unaandika hapo. Nikiwa have a question, kindly ask. Sijasema mposte hapo. Nimesema in case you have a question, raise your hand. And then before you raise your hand, kindly, by next class, identify yourself by your name. So, tuanze na Mariam. Mariam. Oi, kindly ukiona uko unmuted, uliza you just ask. You are unmuted, Mariam. So, kindly go on. Monica. Ujua nakupea 3 seconds. If you don't talk, tunaenda to the next one. Isa.
Yes. Niaje teacher?
Nzuri sana.
Nauliza kutakuwa na block release.
Block release. Kwani una plan usiattend hizo ndizo ukuja blocks?
Sio hivyo.
Kutakuwa na blocks lakini nitakucharge
Sawa.
Hii
exam unaona tukifanya?
Exam hautaepuka, lazima utafanya exam, eh?
Iko.
But we are not sure kama itafanywa July, but for now, okay, expect the worst, eh? But the CASNEP has not yet communicated. So that one we cannot promise. They have not yet communicated.
Okay.
Yeah. Halima.
Good evening, Mwalimu.
Mzuri sana.
Are you able to send for me the lesson of today, the recording?
The recording?
Yeah.
No, the recording you can't get for now. Recording for now. Let's not promise for now. We are in the process of coming up with an app. Eh? So for the recordings, for now we are not sharing.
So far, how many topics have
we have covered? Eh?
So far, how many topics have you covered?
We have covered only 3: published financial statement, and then we have done groups, and then we have done professional firms. It's only the 3. And the cash flows, there are 4. Eh? Only 4.
Because I joined the class last week on Monday.
Sorry?
When we were doing professionals, I think. And
sorry?
How will you help those who have missed most of those topics? How will you help those who have missed most of those topics?
Oh, actually, the topic we have done, eh? The groups and the published, eh? That one is a guarantee. They must be in the exam. So what we can do, because for now we are not sharing the video, eh? So after we are through with the system, you cannot, you can pay for the whole package. If you pay for the whole package, eh? You'll be able to access of all the recordings. That's what I can advise you. Instead of paying per class, you pay for the entire package, that 500. With that, you get everything, including the recordings. That's what I can advise you. Tuko sawa hapo?
Yeah, thank you.
Yeah, karibu. I hope you're okay.
Hello.
Now.
Hello?
Yes?
So we can't get notes for those other classes?
Notes?
Yeah.
Notes of the recordings?
At least the notes if we can't get the recordings.
Now, have you ever done published again in another class?
My first class was the last week class because we were informed
saying,
about this class.
I'm saying,
just last week.
You are doing a PAL for the first time or the second time?
Second.
Kama ni second, I think that one. Okay, you can inbox me. Eh? Kama ni second, I can help you. But kama ingekuwa the first one, eh? Hata ningekupa haikekusaidia. There is those topics you cannot read on your own. Yeah, kinda you can inbox me. Eh?
So if we pay the 3,500, we get the recordings for those classes.
Yeah, actually, eh? If you pay that 500, eh? After the system is through, you'll be access to all the recordings, including the one we are going to do. Eh? So
and we won't get a discount for the classes we've already missed from the 3,500.
No. You see now, if you pay that 500, eh? You also get the recording for the classes we have already done. So hakuna discount hapo. Sio hata hiyo public tutasomea hapo. The group tutasomea hapo, eh?
Na wezi lipa 2 years ya hizo class 3 kama ni 750.
Oh, no. We are not for now we cannot share the recordings as per one class, eh?
Okay.
Yeah, the recordings for now. Yeah.
Okay, thanks.
Yeah, but I think it's cheaper. If you count all the topics for a FAR, eh? Times 250, 250, 250. Actually, you end up paying 4,000. If you pay 250, 250, 250. If you pay as a package, there is a discount of 500. Eh? So you can consider that. So I think that's okay now. So tumesema endeleeni kusoma. Endeleeni kusoma. And then I can advise you, kindly be trying. Eh? Make sure you have a stable network. Si kununua network za other nini hazimsaidii, zinakaa zikihang. And then ukinunua ya 20 bob automatically itahang tu. So it's my advice, unaweza nunua hiyo ya wiki moja mingi in case you're in that position, Kama jaribu kununua ya 100 so that you are not frustrated, because okay, I mean, we are encouraging you to attend live classes because the recording for now I want to explain why you are not sharing the recording. Now imagine you miss a class, I send you a recording and then utumie marafiki wako wote. What's the need for me just coming here? Because kuna mtu atasema I'll not pay for that class, I'll just wait for the recording and then you share for your friends. And then others have been taking our recordings and then they use them for commercial purposes. Unapata zinauzwa kwa other mashule zingine. So that's why we are encouraging you to attend live classes. Recording, that one will coming up with an app. You see, the good thing with an app, you'll not be able to share or to download. Utakuwa unaisomea tu hapo. You go to that topic, specific topic, unaisoma yote. With the app is the best. But for now, kindly attend the mini class. Yeah, Jogona, I can see you are raising the hand, but not through the text. Hapo kwa icon kuna mahali kuna kamkono, utainua kamkono. Si hapo. But it's okay. You can ask.
I have already asked.
Sorry?
I have already asked.
Oh, sawa sawa. We can add. Kwaherini.